Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com. Welcome to today's Morning Call Express. So today you wake up, you see the futures up 8-9 handles after Friday's major reversal. I know we've had a very poor 3-4 weeks. The market's been in correction mode. It started well before the election, intensified thereafter. So the question is, what now? What does Friday's action mean? What does this gap up mean? So right away you go right to the chart, take a look here at the SPX. You will see this was Friday's reversal. First of all, this has been the trend after being broken right around this day. So this day was your way out. This was October 19th when the trend from the June 4th low broke. That was your exit. You came down, retested. If you didn't get out right here, this was a spot to lighten up. So then we kept continuing to the downside. And then look at this day. I know this doesn't mean a lot to everyone out there, but to market timers, this outside day was very important. It's when we went below the prior day low of 1348, reverse strong. First time we saw that in a while. So now today we're gapping up a little bit. I do think we're going to get some resistance around 1373. What you want to see after an outside day is you want to see a little bit of power. You want to see a little bit of commitment. Today's gap up in the futures, it would be constructive if we actually hold it. Over the past few weeks, every time we gapped up, shorts have been able to fade it. So today, with being up 8-9 handles, it'll be very important for us to close near the highs of the day. We've had two other major outside days over the course of the past 2 years. October 4th, 2011 was the day the complexion changed in the market. More recently, June 4th, you saw one. So let's go back to the chart and I'll show you what type of action you saw after those outside days. So if you take a look here a bit longer term, you will see this was a major inflection point. This was October 4th. You saw a quick move away. You saw some commitment. All right, that's what led to a nice reversal pattern in that October-November. Okay, then you go to June 4th. Take a closer look here also. An outside day. This is what stopped the correction to the downside, led to a nice move going into September, October. What you saw here also was a quick move, some commitment to it, and then it continued. So the question is, what type of move are we going to get here? Today we're going to open up. Can we hold? Can we get some commitment? Can we go sideways? And then you're going to see, a bit of a major resistance area. First, you have the 200-day around 1382, and then where we broke down after the election about 1403. So with that said, some key things happened also on Friday. Apple finally looks like it put in a capitulation low in. If you take a quick look at Apple here, you will see, major capitulation through a big level. The volume was about 45 million shares. It's opening up today. If the low in Apple is in, that would be very healthy for the market. I am long Apple. I'm long some spiders. I think right now, if Apple can get and stay above this 533 area, I do think over the course of the holidays, it could try and reclaim or at least test the 200-day, which is around 575. So from here to here, that's what traders are going to be looking to trade. Hopefully we see some commitment. It's up $6-7 today. It'll be good to see if that holds. Facebook also acting a bit different. Ever since they said, okay, 800 million shares, it didn't go down. It's coming up to a gap, 2450. I do think that this could be a good trade to fill the gap, and maybe the complexion changed in Facebook. As far as what to look for in the financials, financials, home builders still somewhat leading the way. Financials came back quickly to the 200-day. Let's see if they can hold their gap up. So, the bottom line is outside days could be a great cash flow trade if you got involved Friday and you sell some into this gap open, but it could also lead to major inflection points in the markets. So the next few days will be important. Can we hold today's gap up, then digest, get some commitment, and then get some follow-through, which is needed to start a new rally, and typically that happens on day 4 through day 7. I'll get into a lot more of this in the long-form version, so stay tuned. Have a great morning trading.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.